All right. Welcome everyone to the Hurley Investments commentary for Monday, March 3rd. I swear time seems to be going faster for me. I got a couple lessons I'm going to go over with today, but I had a question come across to me. And the question was pretty simple. What is tax harvesting / selling? And the best way to say it in plain English is before taxes, people usually take profits. And why do they take profits? Why before taxes are people taking profits? Any ideas? To enjoy giving money to the government, right? So to create cash for paying taxes. That's exactly what they do. And then what happens at the end of the year, typically? What do people do at the end of the year? Any idea? They sell losers to offset the gains in the portfolio. So that's typically how it goes. You do tax selling at the end of the year, tax harvesting at the beginning of the year, and that's the idea behind what people are trying to do in regards to their paying taxes. Now, I had a pretty neat email come to me from Goldman Sachs. And basically it was the idea behind, hey, we need to help you do tax harvesting and tax selling. And I thought that was kind of funny. Kind of funny that someone would think that they need to help me in doing this. That somehow a registered investment advisor needed help in doing some kind of, I don't know, some kind of tax selling because I wouldn't know how to do it. If you take a peek and read all these performances, all these numbers, all these ideas behind, hey, we need to do some kind of tax selling to help you understand what you're supposed to do for making it as cheap as possible when it comes to the tax time. And I gotta admit, I kind of giggle. I kind of giggle when I see this because it's like, what are you thinking? What kind of help do you think I need in regards to getting some kind of taxes sold? How dumb do you think people are that they need someone to do this for you, or a fund to do it for you? I must admit, I kind of giggled as I was going through some of this. Well, you have this and you have this, and we beat it by, we beat it by this, but actually They missed it by this. I mean, it was ridiculous. It was so ridiculous. I did have to sit and I had to be like, is this guy serious? And so I called. I called Goldman Sachs. I called the office and I'm like, really? This is what you're doing. This is what you had last year. And so you feel that you've got a way that's going to help people out to know, plain and simple, hey, you taxed harvest in spring, you taxed sell in fall. And I really had to giggle when it came down to getting this email. I had to giggle. This is not hard. If you were looking at what Hurley Investments might sell, what would people sell this year to taxed harvest cash to pay your taxes? What are the winners you're looking at this year? Nvidia, Meta, Disney's been up big. And the thought process is you're selling those to create cash to pay your taxes, and you're holding on to some that haven't quite come back yet to make a profit. It's really that simple. But now Goldman Sachs thinks, hey, we can do that for you because people don't get it. I really did think it was funny. You shouldn't be taxed harvesting or tax selling anything if you overall make less than $32,000 a year. If you make less than $32,000 a year, you don't tax harvest or tax sell everything. Don't forget, that's considered the poverty for married filing jointly right now, although I think it's going up this year. Don't forget, write-offs, capital gains losses in the past. You have your home mortgage interest. You have 10% you can give to charity. If your medical bills are over 7%, you can take 10% off of your income there. If you own an LLC, that allows you to take off mileage, write-offs for everyday items like a cell phone, your internet, your cable TV, dry cleaning, half of your going out to meals, it lets you write off that you take for business. There's a lot of write-offs, but I did find it rather interesting that, hey, if you need help understanding, we can do this for you. Just a little something that I found interesting that's now out there that I don't know. It shocked me. It really shocked me to hear this. All right, second little lesson or thought process for today. Managing the collar trade. So let's look at Baidu right now. Let's make it a little bit smaller. We went over a little bit of, actually, I think Keeve last week went over technical analysis. So if you were looking at Baidu right now, I'm going to write it down here at the bottom. What would you tell me about Baidu if you were looking at it and wanted to make some simple comments on the Baidu chart? Lower highs, lower lows. Okay. I like it. What else would you tell me about Baidu? It's definitely bearish, right? It's bearish because you have your technical crossovers where it's past below the 50 with a gap or a pass below the 50-day, it's bearish. Crossover right there, it's bearish. So yes, technically the stock is definitely bearish, right? Maybe some bullish divergence on the MACD. Not yet. What else could you tell me about this one, though? Under all the moving averages, that's a big one, right? Bearish and below the 50-day and the 200-day simple moving average because it's below the floor, right? You also could say there might have been some support at 103, 102, 103 and a half area. Anything else that you might think about or say? Taking a peek at it, actually, there's two more answers. Let's see what you guys said. Overall, China's not doing well. Kinda. But I would agree with that. So if I was to make one comment, you're oversold for big money. The Williams percent are, right? So big money might be seeing an opportunity relatively quickly. Your 6 months lows are 97.51. We are close to the oversold line on the RSI. So just a comment, close to oversold and a bullish rebound. Now the question is, we don't know how long or how big that bullish rebound would be. But we are close to a rebound that, looking at this chart, if Baidu was to rebound, where would it first stop higher be at? If you're thinking Baidu is going to rebound and go higher, where would the first dollar figure stop be at that you'd see in this chart? This is how you create expectations or manage that collar trade. Where can it go to the upside? Where's your first level that you think, hey, it could get to rebound to? There are three to where it would basically stop, most likely. Okay, well, we knew we had a level at 103, right? So we could see a rebound up to 103. We have a pivot point at 105.4. We have the 50-day at 109. I'm usually looking at 3 steps higher that it could go from here. If we're looking at Baidu going higher, it literally has 3 higher prices it can get to. It can get to that 103 support level. It can get to the pivot point at 105 and 40 cents. It can get up to 109, which is the 50-day simple moving average. What is the low side? What is the downside risk of Baidu right now? Where is the downside? How, looking at a chart, technically speaking, there you go. The one downside point is 97.51. So if you believe in technicals or you look at technicals, you've got a $2 and, well, it's 51 cents. So you got about $3.20 to the downside, and you have $8.30 to the high side. There's a risk to reward ratio on Baidu right now, just technically speaking. So if you're going to go risk to reward, technically speaking, down to 95, 97.51, which equals roughly $3.20. Upside to $109, or roughly $8.30. So here's the thought process. What we did on Friday is we looked at the same risk to reward, and we ended up taking some profit on the long puts. And we took that profit at 101.48. So today we are 70 cents worse off than we were on Friday. But we took some profit on some long puts. Would you add a covered call? Would you cap upside opportunity in Baidu? Because remember, a collar trade is stock ownership, the protective put, it's a covered call or a short call, and you take those on and off based on technical analysis. Mod says no covered call, but if you were going to cap it, if you want to earn a little more credit to the downside, what would be that covered call, that price that you'd want to possibly cap the upside to earn a couple dollars if Baidu goes down or stayed sideways, especially during the next 3 weeks when our markets are probably going to be flat to down as you have tax harvesting? Mod says 103. That's kind of close, isn't it? 103 would be that first resistance level. And remember, you're thinking it's going to get up there but not go higher, so you can keep that credit of a couple dollars. As for 3 to 4 weeks, you're obligated to sell your stock at a certain price for a certain period of time. Anyone else have an idea? Bill, what would you do? Russ, you've been in education. Where would you go? David, where would you go? Very good idea. Bill says 116, way up here. That would be super safe. I'm not sure you'd get him a lot of credit for it, though. David says the 105, the pivot point. That's funny because that probably might be your best risk to reward, but a pivot point really isn't support or resistance. It's just 30-day herd mentality. I'd probably like the 109. Didn't get over it, didn't get over it, didn't get over it. That might be where I'd want to sell a covered call. Has to be worth 45 cents in case I have to adjust it. But that's where I would be looking to sell the covered call. For us, we took $3 of risk to the downside. 100.999. Actually, we took $4 of risk to the downside. We made great money on puts on the way down, but now we add $4 from where we're sitting here going, hey, what are we going to do? What are we going to do? Where are we going to make our decision? Right now, we're just on the stock. But if we break 97.51, we're probably going to add 1.5 times the protection to make up what we didn't make from $101.48 down to that 97.51. So if you had 1,000 shares, we'd add 15 contracts. If you had 800 shares, we'd add 12 contracts. If you only had 400 shares, we'd add 6 contracts on. to try to make up a little extra because there's zero support down after this, which means the bottom could fall out. But those are the decisions that we make going through a collar trade. This week, we've got a pretty simple week. I really enjoyed the briefing.com's big picture. I hope you guys are really reading through this. A lot of good information, but I don't know. I just giggle. I giggle at what it means. People are making money, but this is an abnormality. This is an abnormality. And remember, investing in the stock market is not a zero risk proposition. That is why we use those puts. That is why we dollar cost average. That is how we beat the S&P 500 over a longer period of time. Will our markets end this week? We're thinking lower. We're going to add more protection. But wow, the Dow has an amazing looking chart since November. But since the beginning of the year, pretty flat. Pretty flat, not significant growth. It's actually been an easy couple of months since the beginning of the year. S&P 500, very similar, but a little more growth on the S&P 500. Still bullish. And the NASDAQ has taken off even more, but a little more jagged. It's obviously gone down more, and it's not quite as smooth. But it is pretty neat to see. Last week, good numbers on PCE. It showed inflation was coming down. For us this week, it's the second week of the shopping or the retail sales. Target and Ross tomorrow. Abercrombie and Fitch and Foot Locker on Wednesday. Thursday, American Eagle Outfitters. I didn't finish all this. BJ, Burlington Coat Factory, Kroger, DocuSign, El Polo Loco, and Gap. But the big one is Costco. And then on Friday, Genesco. This week, ADP report on Wednesday. Consumer credit is kind of important on Thursday, but average work week, non-farm payrolls, private payrolls, if they come in weaker than expected, that will show the opportunity for a rate cut in the near future. Apple hit with more than $2 billion of antitrust fines over streaming music. They show they're showing a benefit to their people and their stuff over everyone else's. I do think it's kind of funny because the reality, this is nothing to Apple. And it also wouldn't surprise me. Well, obviously they're going to appeal it. They're going to appeal it and they're going to tie this up for a decade. So Apple is getting very close to a big buying opportunity and a rebound of more than 10%. But you do need to pay attention to what's happening with Apple. It'll be interesting. Apple fine is just a parking ticket. When could you ever think that almost $2 billion in fine would be considered a parking ticket for a company? Found the article interesting. Meta's platform stocks, new dividend, everything you need to know. We went over this 3 or 4 weeks ago. Good numbers in here, good understanding of how Meta can grow, even though it's grown so much. We will keep adding bull puts to take advantage of it going higher, but also for those people who have been in stock. We're going to take some profits on stock at 500 and do the stock replacement for a lot cheaper, a lot less risk, the Leap Bull Call. But pretty interesting Motley Fool article on Meta. I like the numbers, and it's what we were trying to show you 3 or 4 weeks ago on how much upside Meta could still have year to date. Interesting article on Under Armour on how these three are on their turnaround plans and doing really well. Really nice to see Under Armour with a woman for their CEO. The last couple CEOs, at least the last two for Under Armour, blew it, and blew it bad, blew it with machoism, not common sense. It's interesting to see how well Under Armour is doing with a woman CEO that's kind of put things into place. And then Morgan Stanley came out today with a huge load up on Disney and DraftKings. Very interesting article on Morgan Stanley with some reasons why Disney is a big buy opportunity right here. With that said, questions. What questions do you guys have that I can help answer for you at this time? What questions do you guys have that I can answer for you at this time? Would you add more Disney to portfolios? So, Dave, that's a very interesting question. If we had new money coming in, yes, we'd be adding Disney to portfolios. But those of you that have been with us, we've went from 80 to 200 to back down to 80 to now going back up. We've been adding shares at support levels and on the way down. So we would not be looking to add any more information. We'd not be looking to add any more shares right now because we do it in a process as Apple finds support levels. So that's what I would be saying to you. Abraham, what will Powell say this week? Powell will say he's data dependent. That's what Powell's going to say this week. But again, it's not an official capacity. I'm pretty sure there's not, it's not an official capacity. It's just saying, hey, they're data dependent, and it's not like it's something that the whole world's looking at. So Powell should not necessarily be part of any worry or anything that you think you need to worry about this week. I do know he is speaking, but again, it should just be nothing more than they're data dependent. Russ, when a stock hits your target price, how do you adjust? So to a certain degree, Russ, at times we might lighten up on some shares. At times we're just looking to be able to add a put pretty quickly. With that said, Micron's run a lot this year. Disney's run a lot this year. Under Armour's run a lot this year. Under Armour, to a certain degree, hasn't quite hit its target price, but it's hit its lower target price, going up from $7.30 to $9. So we're a little quicker to add protection onto positions, thinking they might fall back down. Russ, does that answer your question? Abraham, does that answer your question? And David, does that answer your question? If we're fully valued, we got out of Ford some time back. Disney, we're starting to take a little bit of profits off the table because $213 is the lower price and $243 is a high price. But Apple probably is not heading to $243 anytime soon. And Abraham, thank you. Are there any other questions? Good questions, guys. Yeah, Abraham and David, for what will Powell say this week? It's nothing more than the fact that they're data dependent and they bought themselves some more time. They don't want to upset the market and say they're not going to lower interest rates, but it's obviously not going to come in the middle of March, and it won't come in May either. So June and July will most likely be your interest rate cuts, which will be significantly less than what people expect. Maud, are you worried about China? Right now, I'm not particularly worried about China. Nothing new has come out. They've added stimulus, and they also added stimulus last year. So part of adding stimulus is giving it time to work through the system. Really, last year was a working through the system stimulus year. And there's no exact expectation. Well, stimulus comes a year to year and a half after. That's typical, but there's still so much cash on the sidelines that there's really no stimulus rebound that's timable, that you can time in a pretty clear fashion. So the fact that China can stimulate the crap of their economy doesn't make me worry about China right now, because there's no new data that's out there that we don't already know or that makes me worried. If something new comes up, then yes, I'll look at it and I'll be worried, and we'll figure out where we're going to go from there. Good question, Maud. Any other questions? Nice to have you guys having questions tonight. Kevin, why would you exit Meta? I would exit Meta because it's becoming close to fully valued, but there's a safer way to play a run when a company's already up over 100% in a year. So I want the big profits, the hundreds of thousands of dollars that's sitting there in profit on the stock. I want to take that off the table, and I want to have a much cheaper, less risky way to continue running forward with an option, a leap long call option or a stock replacement strategy, so there's less risk on the table. My opinion only, and for those that own Meta, if you disagree with me and say stay in it, I will. But we've got over $100,000 in a single stock position in accounts. It's time to lock that in and not put $118,000 or more at risk. Let's take that profit, let's run with it, and let's create a less risky, cheaper way to continue to capture possible movements higher than put to risk $100,000 or more of profit in an individual stock position. So that's what I mean by taking those profits. All right, I don't see any more questions coming in, guys. Thank you for being here tonight.